weekend all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, your weekend edition for Friday, December 3rd, 2021. Now, before we get too far, today's the last day of my cyber special. I talk about how you can get my charting course, my enhanced Bollinger Band course at the end of this. So if you want to see that, stay tuned. What a week of volatility. You try to get your arms around these markets, it's pretty darn hard. I don't recall it this volatile in a very long period of time. I've been through it, seen this before, and the one thing you have to do is you have to be at two fists and know also when to put both hands in your pocket and you keep them there for a little bit, let the dust settle, and then you approach the market. You need not be in the market every day. For those that are investors, this has been a drawdown, no question about it, and it's something you have to figure out. What do you do about it? Is the game changed? Is it going to continue on? Many people still think you will continue going higher in the stock markets. Other people think, well, the game is changing. I'll let you figure that one out. I don't do end-of-the-year analysis projections for next year. I find that that went away when the internet became very popular. People, and me included, used to write year-end reports, and you'd put them in the newspaper. I'd run them in Investors Business Daily, Wall Street Journal, all the different areas, and I'd get tons of response, and you'd solicit clients with those. Today, I'm doing this every day. This is better than a year-end report because I'm right on top of the market with you. So, change in the Fed? Absolutely. First off, a good change. Fed Chair Powell's going to be nominated and he'll easily pass. Second thing happening, he's changed his opinion about inflation for the moment. It's no longer transitory. It's sticky. It's here. He still thinks it'll slip back in the second part of the year. But right now, the Fed would be better off, in his words, considering tapering a lot sooner, moving the schedule up, which probably means a $30 billion taper will be announced come December 5th as they try to get this over between February and March. Just do the math. You'll see about where you end up with it. The marketplace is going beyond that, and it's pricing in rate hikes that begin in June now and carry with several of them in the rest of the year by some of the analysis that I see. It's too soon. That's wonderful to do it now, but all you need is a slowdown somewhere. Suddenly that doesn't happen. All you need is Omicron to get worse, not better. You got a problem. Omicron is not turning out to be the problem so far, quote unquote, so far that it could have been. Not that anyone said it would be, that it could have been. So far, it's highly transmissible. People are catching it left and right. But if you've had your vaccine and ideally booster shots, you're getting mild cases. And that still carries you to what a vaccine's about. There is no doctor I've read that said if you get vaccinated, you can't get COVID. It's that if you get it, the odds of you being hospitalized or dying from it are down dramatically. That is what the vaccine is about. So those writing me on YouTube telling me, you took it, you got it, that's not what it's about. You took it, you got the Omicron or whatever, and you're still alive. Ideally, that's what it's about. Simple enough? Okay. Inflation. We keep hearing that we have inflation. Why isn't the gold market running with inflation? Why are bonds and notes crashing in yields, not going up? They're not 1.65 in the 10-year. It's 1.4 something, 1.42, 1.44. What's that all about? I get that the curve yield has done this. The front end, the very short, is coming up, but the back end's slipping down. So the expectations back here, they don't look to me like a lot of inflation out there. It's more what the Fed is saying, that blip, you fight it, but then after that, it sort of settles back in. If that's what the market's saying, is that really a bearish scenario for stocks? I don't think so. So things we have to look at. When you look at XLK, you can see how the market had what we call one of these almost vertical price run-ups. You see how you didn't even have a correction. Every week, you made a higher high, not until this week, up through last week. This week, you finally have your break. So this phase of that has come to an end, but it was a 2-month-long phase. What a phenomenal run in the market. If it wants to correct more, It could go to the 18-week average of closes. That's where it's been going and finding support for the better part of a year, not a couple of weeks, a year. Okay, until a pattern changes, why do you think it's going to change? So if it gets there, that's where I think you get interested. Do I ever teach you to buy over a Bollinger Band? These black dashed lines are Bollinger Bands. The odds of staying over it are 5% of the time. When you get successive closes over it, I gave you and I teach you a method here. Take one of those percentage points away for consecutive closes. So right here you had 3 consecutive higher closes in a week. That means for the week after, the one I'll put up next, you have a 2% chance of staying over the band. Market slipped back and down. That's how I do it, which means 98% probability the other way. And you are going to tell me, and you're right, Ira, what if it goes beyond 5? What can I tell you? It went beyond 5. But that's not what you're doing anyways. I'm not telling you to go short here. I'm telling you, if you're looking to be a buyer again, hold your cards, because I think the market's going to give you that opportunity. I am not a top picker. I am not a bottom picker as a chartist. What I am is someone that tries to follow the waves in the charts, tea leaves, as we like to call it in the trade, right? That's what chartists are at the end of the day. But we read pretty well because we study like mad. When you look at the slow stochastic, the momentum in this chart last week was still embedded. Even with that, you had both numbers still staying over the 80 level, the blue and the red, for more than 3 weeks in a row. When you lose it, which you did this week, it puts into play the odds that price and the 18-week average are going to come together. So that's the school of thought I'm in. There is no trend. The bias is up and the odds favor there's more of a correction here. In PAVE, when you lost the reading, watch, excuse me, you had the 80 reading here. If you're going to lose it because you have an outside week down, this could be, if you lose the reading this week, this is the potential target, 27.14. Market had stepped out of its uptrend last week. In XLI peaked out there, went right back to this number. Once it slipped back, you do see how I'm tying this together with the momentum. Now, if it wants to continue down, the next support isn't this. It's not the 100 and 200 week averages. It's obviously the lower Bollinger Band. It's the closest number. That's where the market went, and where's the resistance if you go back up that? You're just bouncing around here. You really went from the lower Bollinger Band to the upper band to the lower band and going back to the 18-week average. And in the whole process, you've lost your trend. You're just now one of these markets that's doing something like that. As we come to the energy sector, this has been a, how do I phrase this the right way? The bias of the market is up since you're over the 18-week average. The market, if it gets and clears, and it didn't like it didn't exist, the 200-week, I would think that the first place it's going to try to find support would be there. If it doesn't, then you go back to this average. And what did it do in the process? Right here on this week. This week, you lose your momentum. The red line's under 80 again. You turn the trend down, bias up. You're in play for that number. And that's basically what's going on right now. Not bearish. You have the trend down, but the bias is up. When you come over to SPY, last week you still had the embedded reading, but when you opened up at the beginning of this week with the volatility, you know, the market was down. For those of you that are subscribers, in my morning I pointed this out. I said, we're already losing that reading. We're probably headed back into this 18-week average, and that's exactly what you did. I'm neutral at this point. I don't see a trend on the chart whatsoever. The emerging markets stuck their necks out, tried to get up on the daily charts, and miserably failed by weekend. If all the good markets are failing, how's this going to hold up? And that's basically what happened. You're still in a bear trend. You're riding the lower Bollinger Band. You may not be done here. While the market momentum is getting oversold, you still have 2 more levels you could probe into. Gold has been one big disappointment. I have been bullish, and Not knocked out yet. I will be at 164.38 in my thinking. I said that I thought that when the market was up here, that I did my special gold report, and I said I think the market could be a buy right in these zones. I'm wrong if you're here. The risk's not big at all, okay? We're talking just over $3 risk. Here's the trade. We'll see if I'm right or wrong. I think if you clear this week's high without taking out 164.38, the trade's going to suddenly look very good. That doesn't mean it's going to do that. In GDX, no. GDX should have held, I thought, right here. I am wrong. And by the way, that's what, when you do these videos, you're not always right. Sometimes your analysis is wrong. I'm human, okay? Market, I thought it would do better than that. I didn't think it would get back through there. And instead, what the market did is it sliced right through it. Now there's no trend. You have a higher high, lower low. Don't know what to do with it. Kathy Woods is out there all by herself, buying, buying, buying. She loaded up this week on Twitter. Huge amounts of it. Stock is oversold. As for a performance this year, this is where she was, 160. She's now coming into the end of the year at 93. It has to be a year where people dumped and moved their money elsewhere. All right, that doesn't mean next year she won't be great. I don't know. I've seen this. I've seen commodity trading advisors that were phenomenal. As soon as I told clients to go with them, it was like the kiss of death. The guy never came back. Well, it's just the way that it was. I laugh at it, but I've been around this so long. Trend is down, getting extended, but that's not a reason to be bullish. Amazon, okay, pulled back, but it should have. Where did it go up to? Do you ever take my enhanced Bollinger Band course? When you have a market that's not embedded and you go up to the upper Bollinger Band, you're looking to take money off the table. I teach it. It's in all the videos that are there. It's not something I have to defend. That's what I teach. And then if you pull back, I'm looking for support again at the 18-week average is one of the numbers. And now, if people are buying it there, you don't want to get back under this. So it's a big risk, but you're trading a $3,300 stock. If it can find its way up, maybe you get there again. Do I think it's just going to collapse going into Christmas? I do not. Do I think that we bought early and that the Cyber Week, Cyber Day, and Black Friday sales didn't meet the expectation? They didn't. But we had been told for 3 weeks, buy ahead of time. And there's been early sales. I get it. Still doesn't mean that sales are going to be bad. Apple, new all-time high this week. How do you fight that? Still looks good to me. Let's get back to that. Still looks good. But do you ever buy over an upper Bollinger Band? I'm going to share my secret. Never. Let somebody else carry that risk. You only stay over that band 5% of the time. There's better places to go. At TLT, what do you do the first time you hit an upper Bollinger Band and the 100-day average of close at the same time? So long, folks. Let somebody else carry that risk. Tesla. Well, is Tesla going to do something here that could get ugly and take out 978.60, which puts into play the 18-week average? You've lost the embedded reading. When this happens and you lose these numbers that were embedded and you turn down, let me give you what happens. Normally, the high percentage trade is that, yes, it's going to do that unless it gets back over that 1201.90, so it favors this market for a failure. We'll see if I'm right or wrong. So as I said, one of the things that I want to talk to you about is my cyber sale, which is basically over. You can get it today, and that's about it. Any one-year subscription, and they're not expensive to my research, so let's talk the ETF. It's $159 a year, just over $13 a month or so, right? You can choose from my charting course at $249.95 value, or you can take the enhanced Bollinger Band course. Either one. Yours, you can give it away as a gift. You tell us when you want the courses to start. We'll do that. But you got to buy now. All right, after that, it's over. I won't be doing a Christmas sale. So this is the one that you're going to get from everything I've got planned, at least. The plans start for my futures at 156. The combo is, we give you a special price on if you get the futures and the ETF Spider ones. And that's the way I'd be going. And the reason is, how many of the ETFs you trade are based on the futures? You want to know what that's doing at 5:36 in the morning, and then I give you the ETFs, let the price get in. I put out my ETF one after, I want the market to trade that first 20 minutes or so. I want all that algorithm money to get in so that now we're not trading the surge of the money. We're trading as the money is adjusted to the market. Plus, we get a lot of reports between 8:30 and 9 o'clock a.m. Central Time in Chicago for the government, and then I've got the reports going for you. So that's how I like to do that. So how do you get it? Just take your cursor, move up here on the video, click it, and when you click it, you're going to see the link. An icon will show. Click on it. Everything you need is right there. I'm Ira Epstein. You have a great weekend, and I'll see everybody come Monday. Take care now.